Now, joining us to share his commentary on the day's market performance is Sean Culverwell from Anchor Capital. Hi, Sean. Good to chat to you. Alex Forbes, that's the big story of the day. And those results, I think Dawie de Villiers, the CEO, he's going to be smiling somewhat.
Yeah, I think the implementation of the new operating model appears to be working with some good growth in the normalized profit. Maybe a little bit less than the market was expecting, with the share price off 5% last time I checked, but it is very illiquid, so you will have some volatility. I think what was very important was that the performance was driven by multiple factors, so it was quite broad-based. Higher average assets under management, positive investment performance, very good client retention, and then most importantly for me, new business flows across the investments and retail segments were very strong. There was just one fly in the ointment, with obviously operating expenses jumping on the cash settlement of those incentive plan awards, but strip that out, it was very good underlying results.
Yeah, you can definitely see that, but yeah, down 4%. I mean, that could, like you say, that could go either way. Standard Bank sticking to its guidance. I think that was predictable, but also a solid equity.
Yeah, we do like Standard Bank quite a bit. Predictable results, as you say, with similar trends for the 10 months versus what we saw when they reported their interim results. All the key drivers are staying intact. One thing going towards the year end, we are a bit more optimistic on their credit loss ratio for the full year versus what they reported over these 10 months. So we do think that they can deliver low teens earning growth, and we do think that return on equity will continue to tick higher, which should take the multiple with it. So very positive on Standard Bank going forward.
You know, it's interesting, Sean, because we've been going through Standard Bank now. We've had Netcore, Nedbank. We've also had First Rand. We've had all the banks all in positive territory. And looking at our financials, well, that's a good thing. It's a good story to tell for South Africa.
Definitely. And we think that the SA banks across the board are very cheap relative to global peers, relative to where they should be, given where bond yields are. And that's one of our, more robust investment positions is the SA banks, and trends across the board are going in their favor as it stands.
Yeah. All right. High prop as well. You would have heard that in our news bulletin now. What's your take?
Yeah, I mean, property is having a sort of a renaissance here across the board. Been very good equity gains. High prop itself, I think it's up 20% year to date. And these were decent numbers, showing good growth in South Africa portfolio, good growth in their European portfolio. I think what was most positive in this result was the vacancy rate reducing by about a percentage point from 4.2% to 3.2%, and collections were very, very good. The anecdote out of this period was that they had Walmart open in their Clearwater Mall, which was very interesting, and I heard that was quite a blowout, but it could be an important tenant for them over time.
Well, I think it can. It's still very early days for Walmart, so we'll have to wait and see what happens. But the general picture there with high prop and others, and over the past 2 or so weeks, we've been concentrating on property, and you can see that people are going back to offices. They're occupying. The property market is starting to lift off a little bit. Are you also seeing the same thing?
Yeah, we are, and I think especially for someone like high prop and other REITs that have big retail exposure. I think there was a period of time where everyone thought Amazon and Takealot would eat these guys' lunch. No one's going to go to malls anymore. I think what everyone's accepting now is that going to a mall does have a place in consumers' lives, and will continue to do so going forward. So some of those, doomsday fears have been allayed, and the recovery through since COVID has been good.
Mm-hmm. And then Tharisa, that's another one that's also been making news headlines today. What are your thoughts?
Yeah, very, very messy results. Obviously, the chrome business struggled with production and the global chrome price, but thankfully, PGMs came to the rescue, with PGM prices looking very good at the moment. They also got that royalty credit, which saved them a bit. But going forward, I'd say net quite positive. Their production guidance for the PGMs looks very, very good. Balance sheet's in a good position. We just hope that they stay, strict in terms of their capital allocation.
Yeah, just a general observation on the all share, and it seems to be doing very well. We had our President Cyril Ramaphosa speaking last night about the G20. The general picture, the mood seems to be lifting. I mean, what is your take?
I would say that, yeah, I would agree with that. Just anecdotally, I chatted with Southern Sun's management last week, and they just said over October it was the best business activity they've seen. Their occupancy rates were the best they've seen since the 2010 World Cup. So, South Africa in general have had some positive news come through, consistent, the ratings upgrade, the G20 off the grey list. So slowly but surely, we're getting some positive sense of, positive news coming out, which is lifting sentiment. We just got to maintain it.
Yeah. Of course, the gold price also continuing to climb. I see some of our gold miners doing well today. I mean, that has been such a great success story. We're just a little bit worried about gold because that bubble may pop at some point and those miners may, I don't know, be grimacing and going the other way.
Yeah, I think gold, it was quite telling this last month where we sort of had a risk-off environment and almost all asset classes sold off. Gold came off a bit, but it still held up relatively well, and it's almost back to those all-time highs. So it seems like the underlying drivers, central bank purchasing may be more enduring this time around in the cycle than, some of the previous drivers for the gold price had done. So yeah, hopefully it can stay, above 4,000, which is very beneficial for our terms of trade.
Yeah. Right, Sean, hold that thought before we move on to your stock pick. Let's take a moment to touch on which counters your industry peers are watching closely.
Yes, the largest music company in the world. And these things have really transformed because of the streaming services. They own the IP. Every time you listen to a song, that'll generate a bit of revenue for Universal Music. They own the Taylor Swift catalog, including all of her upcoming albums. Mm-hmm. You wouldn't believe what a significant portion of earnings growth that is, or perhaps you would. And then, just from a technical perspective, the second largest shareholder in this business is Vivendi. And Vivendi is subject to a legal case at this stage, where essentially the owner, Vincent Bolloré, is accused of having effective control through a restructure. And the highest court in France is to rule on this today. And that is why, speculatively, I suppose, why the Universal Music Group share price is so suppressed. Because if he loses this case, he's expected to settle that situation.
We are quite constructive on SA Inc. at the moment. And we think that we can pick up some quality at a reasonable valuation. That's pretty much what Clicks at the moment. So we expect about a forward P of about 22. If you look over the last 8 or so years, that's a very good entry point into Clicks. And also remember, foreigners haven't been buying our market for a number of years, but they've been buying our bond market for the last few months. So if foreigners do come back, I can bet you bottom dollar they're going to start looking at businesses like Clicks, Capitec, and so forth. So if you can buy Clicks at a relative attractive valuation with decent growth, we think it's a good entry point.
Right, now for your stock pick. All right, Sean, before we get there, I mean, Universal Music Group, what are your thoughts here? And I love the fact they spoke about Taylor Swift, because you have one of those hit artists and your stock just climbs.
No, we really do like UMG. It's the best placed globally to sort of take advantage of this strong demand for music that we've seen and will remain in our lives for some time. They've got 30% share of global catalogs, so they are the partner of choice for artists, given its scale, expertise, and global infrastructure maximizes their profitability as well as the artists. But then also UMG rides the tailwinds from Spotify, Tencent Music, YouTube Music. Whenever those platforms raise prices, UMG benefits from a take rate on whatever deal they have with those streaming services. This year they struggled because there weren't many price increases, but some have come through now and we expect growth to accelerate next year. So we do like it a lot.
I like that, growth for next year, so invest now, in other words. All right, Clicks.
Correct.
Clicks as well, also another solid stock.
We also like Clicks quite a lot. Bettina and her team execute exceptionally well. They had a very good year this year, and we think that they're going to have a very good year next year. Their store opening plans a little bit ahead of what we thought it would be, so that's positive. But then also they've still got a big network of stores that don't have a pharmacy in it because of those pharmacy licensing delays that they experience. So We think they're going to drop a lot of pharmacies into stores, and typically you see the front shop benefits by upwards of 40% when it gets a pharmacy in it. So we think it's very attractive. It's trading, sort of on its trough multiple relative to its history, and it's, defensive growth. So we like the name a lot.
There we go. Right, so there we go. That's Universal Music and also Clicks. What is your stock pick for a Monday?
So my stock pick is Premier Group. We just think the business is run by an exceptionally strong management team that sort of have a reliable growth algorithm that's delivered strong earnings growth since it IPO'd out of Brait. We think the underlying growth drivers remain intact, notably de-gearing, but also very, very strong operating margin expansion. So they've got this new Aeroton bakery that's now online that will provide some margin uplift, but then also help ease some supply bottlenecks during the festive season. So previous years, they haven't been able to sell enough bread to meet the demand just because of their capacity constraints. They won't have that issue this year with Aeroton, online. And then we also think they'll continue to take market share, most likely from Sasco, with PepsiCo running it from overseas. Looking a bit further out, we do like the Rhodes deal. It makes strategic sense. It was a good valuation. So yeah, Premier is a company with multiple growth levers, and we back management to deliver it.
Sure, there's some solid advice there. Sean, thank you very much. Good to have you on Business Lunch. Do appreciate you taking the time. Right, that was Sean Culverwell from Anchor Capital.